The prospect of a Donald Trump victory in the 2024 U.S. presidential election has sparked widespread interest and concern across financial markets and the cryptocurrency world. Known for his unique, and sometimes polarizing, approach to governance, Trump's potential return to the White House brings with it questions about how his policies could shape the economy and alter the financial landscape. For investors, the implications are significant. Trump's first term left a marked impact on U.S. markets through tax cuts, deregulation, and an aggressive stance on trade, each of which set off waves of volatility and growth across sectors. Now, with an evolved global economy and the rise of cryptocurrency as a mainstream asset, a second Trump presidency could bring new challenges and opportunities to both traditional and digital financial spaces. In his previous term, Trump implemented significant tax reforms and promoted a policy of deregulation, creating a more business-friendly environment that led to record stock market gains. His administration also took a strong stance on international trade, sparking tensions with China and introducing tariffs that disrupted global supply chains. These policies impacted U.S. markets, and the aftershocks extended worldwide, shaping international economic relationships in lasting ways. As investors and financial analysts look ahead, many wonder how these same strategies might play out in today's economic landscape, where inflation and geopolitical tensions have intensified. This time around, the stakes are even higher. The financial world has changed, with digital assets like Bitcoin and Ethereum now occupying a prominent place in the investment portfolios of millions. Cryptocurrency, once seen as an experimental asset, now commands the attention of traditional investors and governments alike. Trump's stance on crypto has historically been skeptical, hinting at potential regulations that could impact the future of digital currencies. His opinions on the Federal Reserve and interest rates are also likely to influence his economic policies, possibly driving decisions that could shake up investor sentiment, market stability, and economic growth. As we dive into this analysis, we'll examine the key elements of Trump's economic philosophy, explore how his previous policies influenced markets, and project potential scenarios for 2024 and beyond. From traditional stock markets to the increasingly prominent world of cryptocurrency, we'll explore the data, case studies, and insights that shed light on the ripple effects a second Trump term might have across the financial sector. For investors, economists, and crypto enthusiasts alike, understanding these potential shifts is essential to navigating the uncertainties of a post-2024 market landscape. Trump's economic policies, then versus now. To understand how a second Donald Trump presidency might shape the financial markets and cryptocurrency landscape, it's essential to examine his economic policies from his first term and how they may evolve to fit a new set of economic challenges in 2024. During Trump's first presidency, his economic approach focused heavily on deregulation, tax cuts, and trade protectionism. The Tax Cuts and Jobs Act of 2017 was one of the hallmark achievements of his administration, reducing the corporate tax rate significantly, which many credited with fueling stock market growth and boosting corporate profits. In tandem with deregulation efforts, especially in finance, energy, and environmental policies, these moves helped create what Trump called a more business-friendly environment, allowing companies to reduce costs and increase profitability. For instance, by easing certain regulations on banks, Trump aimed to stimulate lending and financial sector growth. This approach often led to high volatility in the markets, but it also led to significant gains in key sectors, particularly those closely aligned with his policy objectives, such as energy and defense. As Trump campaigns for 2024, his economic messaging reflects many of the same principles, though the context has evolved. Today, global inflation, the long-term impacts of the COVID-19 pandemic, and rising geopolitical tensions require a more nuanced approach. If elected, Trump may reintroduce tax cuts, possibly aimed at boosting sectors like manufacturing and energy, which he believes are essential for national self-sufficiency. His emphasis on America First policies could lead to more tariffs and trade restrictions, potentially sparking another round of trade tensions with China. Such measures might offer short-term boosts to select U.S. industries, but they also risk creating market volatility and affecting international trade flows. Cryptocurrency, which wasn't as prominent during Trump's first term, now plays a crucial role in financial markets, and his stance on digital assets could impact their trajectory. Historically, Trump has been skeptical of cryptocurrencies like Bitcoin, questioning their legitimacy and stability. If he returns to the White House, his administration could pursue stricter regulations on crypto, aiming to curb potential fraud and enhance oversight. Alternatively, given the growing influence of blockchain and crypto in the economy, Trump might adopt a balanced approach, promoting innovation while implementing controls to address his concerns. In a potential second term, Trump's policies could create an environment of both opportunity and risk. His focus on traditional industries, combined with possible regulatory pressures on newer sectors like crypto, could lead to substantial shifts in both the stock and digital asset markets. The 2024 economic landscape presents new challenges, and how Trump addresses these could reshape investor sentiment and market stability across multiple sectors. Potential changes to Federal Reserve and monetary policy. Donald Trump's stance on the Federal Reserve and monetary policy has historically been one of strong opinions and, at times, direct criticism. During his first term, Trump frequently expressed frustration with the Federal Reserve, particularly when it came to interest rate decisions. He often argued for lower interest rates, believing that they would further stimulate economic growth and keep borrowing costs low for American businesses. If he returns to the White House in 2024, Trump's influence on the Federal Reserve could significantly shape monetary policy, with ripple effects that extend across financial markets and the cryptocurrency sector. Trump's previous calls for a pro-growth, low-interest environment reveal his preference for policies that promote short-term economic gains. In a second term, this inclination might translate into more pressure on the Federal Reserve to maintain low interest rates, especially if economic conditions remain challenging due to global inflation or post-pandemic adjustments. A Trump-led White House might push for a Federal Reserve that is more aligned with executive priorities, potentially leading to heightened debates about the Fed's independence and the role it should play in shaping monetary policy. The impact of such moves could be profound for both traditional markets and digital assets. Low interest rates typically encourage more investment in stocks and high-risk assets, as investors seek higher returns than what conservative savings or bond investments offer. This could lead to increased demand in the stock market, particularly in sectors that tend to benefit from low borrowing costs, such as real estate and consumer goods. Conversely, for cryptocurrency, a low-interest environment could bolster investment as well, especially as some investors view digital assets like Bitcoin as a hedge against inflation and currency devaluation. However, pushing the Federal Reserve in this direction could also heighten concerns about inflation, particularly if economic growth doesn't match the pace of currency supply. With inflation already a critical issue worldwide, a more interventionist stance by Trump on Federal Reserve policy could lead to uncertainty, which in turn might create volatility across all asset classes, from stocks to digital currencies. Balancing these priorities will be crucial, as a heavy-handed approach could lead to instability in both US and global markets, making the Federal Reserve's role under Trump a pivotal factor to watch for all investors in 2024 and beyond. Stock market reactions, volatility or stability. When considering the impact of a second Donald Trump presidency on the stock market, one of the most crucial questions is whether his return would bring greater stability or increased volatility. During Trump's first term, his policies and public statements often led to fluctuations in the market, particularly as he took to social media to voice opinions on everything from trade negotiations to Federal Reserve policies. His "America First" agenda, tax cuts, and deregulation efforts were generally seen as market-friendly and contributed to record highs in the stock market. Yet, these gains were frequently tempered by market jitters stemming from unexpected tweets, trade tensions, and sudden policy announcements. Looking ahead to 2024, many investors are evaluating whether Trump's influence would once again inject volatility or if his policies might now align with a maturing market environment. Some financial analysts argue that a Trump win could initially boost markets, especially in sectors like energy, financials, and defense, which traditionally benefit from his pro-business stance. Sectors tied to national security, including defense and aerospace, might experience particular growth as Trump continues to emphasize the importance of US strength on the global stage. However, others caution that Trump's history of unpredictability might lead to market swings. With trade policies likely to return to the forefront, particularly regarding China, there's potential for global market disruption. During his previous term, Trump's tariffs and trade restrictions led to reactions across global markets, affecting commodities, tech, and manufacturing sectors. If he were to revive or intensify these strategies, companies reliant on international trade could see stock fluctuations, and these ripples might extend to international markets as well. In a post-2024 market, technology companies might also face renewed scrutiny. If Trump continues to question the influence and regulatory oversight of tech giants, stocks in this sector could experience volatility, especially if his administration implements new regulations or breaks up large companies. For the stock market overall, Trump's influence could bring a mix of short-term boosts and long-term uncertainty. Investors may see initial gains in industries aligned with his policies, but the possibility of abrupt changes or conflicts in international trade and regulatory approaches could add layers of volatility to the market landscape. This dynamic environment would likely keep investors alert and responsive to potential policy shifts as Trump's economic vision unfolds. Global trade policies and their impact on markets. The potential return of Donald Trump to the White House brings with it the likelihood of renewed emphasis on America First trade policies, which were a defining feature of his first term. Trump's previous approach to global trade focused on reducing the U.S. trade deficit, especially with major trading partners like China, and on protecting American industries through tariffs and trade barriers. His trade policies led to heightened tensions with multiple countries, disrupting global supply chains and impacting everything from agricultural exports to tech imports. As we look forward to 2024, it's essential to consider how similar policies might impact financial markets, both in the US and internationally. If Trump's trade policies re-emerge in his second term, we could see a resurgence of tariffs and other barriers aimed at foreign competitors, particularly China. The trade war between the US and China during Trump's first term resulted in a series of tariffs that affected the price of goods, commodities, and raw materials. US companies that rely on imported components for manufacturing, like the tech and automotive sectors, experienced cost increases that trickled down to consumers. Should Trump reintroduce similar tariffs, these industries could again face financial strain, impacting stock performance for companies heavily involved in international trade. Beyond China, Trump's previous policies also targeted trading relationships with allies, including tariffs on European goods and renegotiations of trade agreements. If these approaches return, global markets may respond with caution, leading to short-term volatility as investors gauge the economic impact of disrupted trade flows. The cryptocurrency market, which thrives in conditions of decentralized trade and value transfer, could also feel the effects, as investors might turn to digital assets as a hedge against traditional market disruptions. However, it's also possible that some sectors could benefit from Trump's renewed focus on domestic production. Industries like manufacturing, steel, and energy, which are closely tied to national infrastructure, may receive new investments and see stronger performance if Trump incentivizes domestic production. Additionally, the agricultural sector might face both challenges and opportunities, as retaliatory tariffs could limit export markets, while potential subsidies and incentives could help stabilize farmer incomes. In the end, the global economy is far more interconnected today than it was during Trump's first term. Reintroducing protectionist policies could lead to significant adjustments in international trade, affecting not only stock and commodities markets but also influencing the value of the US dollar and the positioning of digital currencies. Investors in both traditional and emerging markets will need to monitor these developments closely, as Trump's trade policies could create both volatility and opportunity across global markets. Cryptocurrencies and blockchain, friend or foe under Trump? As cryptocurrency continues to grow in mainstream acceptance, the potential influence of a Donald Trump presidency on this sector has become a topic of intense speculation. Trump's stance on digital currencies has historically been one of skepticism. During his previous term, he voiced concerns about the stability of cryptocurrencies, particularly Bitcoin, and raised questions about their role in the economy. If Trump returns to the White House in 2024, his approach to cryptocurrency regulation could significantly impact the market, shaping the way digital assets are used, regulated, and valued. In Trump's earlier comments on cryptocurrency, he expressed a desire for stricter regulations to prevent the potential misuse of digital assets for illegal activities like money laundering. This cautious stance resonated with some policymakers, leading to increased scrutiny on crypto exchanges and initial regulatory discussions. A second Trump administration could see an intensified regulatory framework, with the aim of providing more oversight over crypto transactions and exchanges. Such moves might include stricter KYC, know your customer requirements, increased reporting standards for crypto transactions, and a clearer legal framework for managing digital assets in the US. While these measures could add stability and security to the sector, they may also deter some investors who favor cryptocurrencies' decentralized and less regulated nature. On the other hand, Trump has always been an advocate of American economic dominance and innovation. If he recognizes the economic potential of blockchain technology and crypto innovation, there is a chance he could adopt a more supportive stance, balancing regulation with incentives. For example, Trump might explore policies that foster blockchain innovation within the US, promoting advancements in sectors like finance, supply chain, and healthcare. By doing so, he could position the US as a global leader in blockchain technology, attracting talent and investment while keeping regulatory checks in place. For the cryptocurrency market, Trump's return could bring a mix of regulatory pressures and potential opportunities. Increased oversight might stabilize the market, making it more appealing to traditional investors wary of crypto's volatility and security issues. However, aggressive regulations could stifle some of the freedom and decentralized benefits that attract crypto enthusiasts, potentially leading to a decline in speculative investment and limiting the growth of smaller crypto projects. If Trump's policies find a middle ground, supporting blockchain innovation while safeguarding the financial system, his presidency might establish a new phase of growth for the cryptocurrency sector, albeit one marked by a more structured and government-overseen landscape. Ultimately, the impact of Trump's stance on cryptocurrency would depend on his administration's ability to balance regulation with innovation, a task that could redefine the future of digital assets in the US. Investors and blockchain developers alike will be watching closely to see if a second Trump term fosters a friendlier or more restrictive environment for crypto. Regulatory changes in key sectors. One of the defining elements of Donald Trump's first term was his approach to regulation, often described as a business-friendly strategy that sought to reduce government oversight across various industries. Trump's focus on deregulation was evident in sectors such as finance, energy, healthcare, and technology, where he aimed to remove what he saw as barriers to economic growth. As he campaigns for a second term in 2024, Trump's stance on regulation remains largely unchanged, with promises to revive this approach. If he returns to the White House, his regulatory policies could again lead to significant shifts in these key sectors, impacting both traditional markets and newer fields like cryptocurrency. In finance, Trump's initial term saw efforts to roll back portions of the Dodd-Frank Act, particularly in the banking industry, with the goal of stimulating lending and investment. If he pursues similar policies in 2024, banks and financial institutions could experience another wave of deregulation, potentially leading to increased profitability. However, there are risks associated with these changes. Loosening regulations might result in more aggressive risk-taking among financial institutions, which could increase the likelihood of market volatility or even financial instability if not managed carefully. The energy sector is another area where Trump's deregulatory approach might play a pivotal role. During his first term, he eased environmental regulations, including those affecting oil and natural gas production, in an effort to promote energy independence and lower energy costs. A second term could see further efforts to reduce restrictions on fossil fuel industries, benefiting companies in this sector but raising concerns among environmental advocates. For investors, these moves could mean growth in energy stocks, especially those tied to domestic oil and gas production, but they could also lead to international criticisms and potential trade repercussions. In the realm of healthcare, Trump has previously expressed interest in reducing regulations that impact pharmaceutical companies and healthcare providers. A return to deregulation here might foster innovation and lower costs in certain areas, though it could also result in market volatility if companies are given more leeway to set drug prices or expand operations without stringent oversight. Such changes could have mixed effects on healthcare stocks, benefiting some while adding uncertainty to others. For technology, Trump has taken a critical stance on the power of major tech companies, often discussing the need for more scrutiny. While this may seem contradictory to his deregulatory stance, Trump's concerns about tech monopolies could lead to regulatory changes specifically targeting these companies, with a focus on privacy, data use, and market competition. This approach could introduce new challenges for tech giants, potentially reshaping the sector's landscape and influencing stock values in unexpected ways. The regulatory environment in a second Trump term would likely foster growth in traditional industries but could introduce volatility, especially in sectors heavily impacted by government policies. For investors, understanding the regulatory landscape under Trump's leadership would be essential to navigating these shifts and capitalizing on emerging opportunities across markets. Impact on the US dollar and currency markets. The potential impact of Donald Trump's return to the presidency on the US dollar and currency markets is a significant point of interest for investors and global markets alike. During his first term, Trump's stance on the dollar was occasionally contradictory, as he alternated between calling for a strong dollar to reflect a robust US economy and a weaker dollar to make American exports more competitive. As he campaigns for 2024, his trade and economic policies suggest that his approach to the dollar may once again be driven by pragmatic goals rather than a fixed ideology, with significant implications for currency markets worldwide. In a second term, Trump might continue advocating for policies that prioritize US competitiveness in global trade. This approach could potentially involve encouraging a weaker dollar, especially if it supports his "America First" agenda by making American goods more affordable on the global stage. A weaker dollar policy would likely benefit exporters, including sectors such as manufacturing and agriculture, that rely heavily on global markets. However, such a stance could also increase import costs, affecting sectors and consumers dependent on foreign goods and materials. The currency market's response to a weaker dollar could be multifaceted. For one, it might lead to a realignment of currency values as other nations adjust their monetary policies in response. Additionally, a weaker dollar may prompt some investors to look for alternative stores of value, potentially driving interest in commodities like gold and even cryptocurrencies, which are often seen as hedges against traditional currency fluctuations. On the other hand, Trump may choose to focus on the strength of the dollar as a reflection of US economic dominance. A strong dollar policy would make imports cheaper, benefiting American consumers, but could make exports less competitive internationally. In this scenario, countries with significant trade relations with the US might see their own currencies depreciate in response, leading to a ripple effect across global markets. This policy would likely attract more foreign investment in US assets, especially bonds, as a strong dollar enhances the attractiveness of returns on US investments. For cryptocurrency markets, Trump's stance on the dollar could play an indirect but important role. If Trump's policies drive uncertainty or volatility in the dollar's value, it could lead some investors to increase their holdings in digital currencies as a hedge against potential currency devaluation. Bitcoin and other cryptocurrencies, often viewed as decentralized assets outside of traditional government control, may see increased demand if investors perceive instability in fiat currencies. Ultimately, the impact of Trump's approach to the dollar in 2024 will depend on the broader economic context and his administration's priorities. A focus on a weaker dollar might support domestic industries but could lead to inflationary pressures. Conversely, a strong dollar policy could attract global investors but potentially harm American exporters. For investors in both traditional and digital markets, understanding Trump's currency stance will be key to navigating potential changes in value, demand, and global economic positioning. Inflation, jobs, and wage growth. Donald Trump's return to the White House in 2024 could bring about notable shifts in the areas of inflation, jobs, and wage growth, all of which play a crucial role in the broader economy and directly affect investor confidence. During his first term, Trump focused on policies that he believed would boost job creation and stimulate wage growth. His tax cuts and deregulatory efforts were intended to spur business investment, which in turn would create jobs and provide Americans with higher earnings. With inflation now a more pressing issue than during his first term, Trump's approach to job creation and wage growth will need to account for the current economic landscape and the challenges it presents. If Trump resumes a pro-business strategy, aiming to reduce corporate taxes and ease regulations, the immediate impact could be a boost in hiring as companies expand operations and increase production. His administration might target key sectors such as manufacturing, energy, and construction, which align with his "America First" ideology and his emphasis on domestic industry. By stimulating growth in these areas, Trump could potentially create a favorable environment for blue-collar job creation, which could appeal to his voter base while also strengthening the overall labor market. However, job creation alone may not be sufficient to address rising inflation, which has already become a significant concern for consumers and businesses alike. If Trump adopts policies that encourage higher production but also lead to increased demand for resources and labor, it's possible that inflationary pressures could rise. For example, efforts to revive US manufacturing could drive up demand for raw materials, energy, and logistics, all of which could contribute to higher consumer prices. The resulting inflation would then impact both traditional markets and consumer spending, potentially creating a feedback loop of rising costs. In terms of wage growth, Trump's policies could lead to some upward pressure on wages in select industries, particularly if there is high demand for skilled labor. During his first term, certain sectors, such as construction, experienced wage growth due to the increased demand for workers. A similar trend could occur in 2024, especially if Trump's policies create new jobs in industries that require skilled labor or specialized training. However, if inflation rises faster than wages, the real purchasing power of workers could decline, dampening consumer confidence and affecting market performance. For cryptocurrency, Trump's influence on inflation and wages could indirectly affect investment in digital assets. If inflation remains a concern under his administration, more investors may look to hedge against it, increasing interest in assets like Bitcoin and other cryptocurrencies that are often perceived as stores of value. Conversely, if inflation is kept under control and wage growth stabilizes, consumer confidence may rise, which could reduce the urgency to seek alternative investments. Ultimately, Trump's handling of inflation, job creation, and wage growth in 2024 will be crucial to his economic legacy. Balancing these factors will not only impact the US economy but also influence global markets and the investment decisions of individuals, from stock market participants to crypto enthusiasts. Investor sentiment and behavioral economics. Investor sentiment is a powerful force in financial markets, and with Donald Trump potentially returning to the presidency in 2024, there's considerable interest in how his policies and presence might influence investor behavior. Trump's previous term in office was characterized by market volatility, with stocks reacting not only to his policies but also to his frequent public statements. From trade war tweets to announcements about tax reforms, Trump's ability to move markets was evident. For investors, understanding the psychology behind these reactions and preparing for potential shifts in sentiment is essential as they navigate the financial landscape under a second Trump term. Behavioral economics suggests that investor sentiment is often influenced by both rational analysis and emotional response. Trump's polarizing nature has historically fueled both optimism and apprehension among different segments of the market. His tax cuts and deregulatory policies during his first term encouraged a bullish outlook, particularly among investors in sectors like finance, energy, and defense, where deregulation translated into growth opportunities. Should Trump bring similar policies to the table in 2024, we may see a renewed wave of investor enthusiasm, particularly in industries that align with his pro-business stance. However, Trump's approach to international relations and trade could bring uncertainty that tempers this enthusiasm. During his first term, markets often responded to his stance on global trade, especially in relation to China, with sharp fluctuations. Investors are likely to remain cautious if Trump's return brings renewed trade tensions, as these could impact not only American companies but also multinational corporations that rely on stable international relationships. Concerns about potential tariffs, supply chain disruptions, or foreign investment restrictions may influence investor sentiment, leading to a mix of optimism and caution in different areas of the market. In addition to traditional markets, Trump's impact on cryptocurrency could also shape sentiment in this emerging sector. While digital currencies have typically operated independently of government influence, increased regulation or restrictions under Trump could lead to shifts in investor psychology within the crypto community. For some, a Trump-led regulatory framework could provide a sense of legitimacy, increasing trust in digital assets and drawing in more conservative investors. For others, potential restrictions might dampen enthusiasm, particularly if Trump's policies are seen as limiting the decentralized nature that many crypto investors value. Ultimately, investor sentiment in a second Trump term would likely reflect a balance between excitement over pro-growth policies and caution around potential policy shifts. As behavioral economics teaches us, the market's emotional responses to Trump's actions and statements will continue to play a critical role in shaping stock and crypto trends. For investors, understanding and anticipating these shifts in sentiment could be key to navigating the ups and downs of a financial landscape influenced by one of the most polarizing figures in modern politics. Predictions and controversial insights. A second Donald Trump term is bound to inspire speculation, with financial analysts, investors, and crypto enthusiasts all eager to forecast the potential outcomes of his policies. While no prediction can be entirely accurate, analyzing Trump's economic philosophy and historical impact on markets offers valuable insights into what we might expect if he returns to the Oval Office in 2024. Trump's policies often spark controversy, as he tends to challenge conventional wisdom and take unconventional approaches. Here, we explore some potential outcomes and the controversial perspectives that surround them. One prediction is that a Trump win could lead to an immediate surge in specific sectors of the stock market, notably those tied to traditional industries such as energy, defense, and construction. These sectors tend to align well with Trump's policy objectives, particularly his focus on strengthening domestic industry and prioritizing national security. In contrast, tech companies, which have frequently faced scrutiny under Trump's administration, might experience initial sell-offs due to concerns over potential regulations. This potential tech sector volatility may open opportunities for other areas of growth, encouraging investors to diversify portfolios toward Trump-favored industries. A second prediction relates to cryptocurrency. While Trump has previously voiced skepticism about digital currencies, his return could bring more structure to this rapidly evolving market. Some analysts believe that Trump's push for regulatory oversight might stabilize crypto markets, attracting institutional investors who seek a more secure environment. However, others caution that too much regulation could stifle the innovation that has fueled the sector's growth. This balancing act could create tension, as investors weigh the benefits of stability against the potential loss of cryptocurrency's decentralized appeal. There are also controversial insights surrounding Trump's trade policies, particularly regarding China. A return to tariffs and protectionism could have dual effects. On one hand, promoting US-based manufacturing and domestic jobs, while on the other, risking retaliation from trade partners. Trade restrictions, especially with China, could lead to inflationary pressures by increasing the cost of imported goods, which could, in turn, impact consumer spending and broader economic growth. This "America First" approach might benefit certain industries, but it could also isolate the US economically, affecting both the dollar's value and global market relations. Finally, Trump's stance on the Federal Reserve could present another point of contention. If he advocates for low interest rates to stimulate growth, inflation could become a long-term concern, especially if economic growth fails to keep pace. Critics argue that this strategy could introduce volatility and uncertainty across all asset classes, as inflation affects consumer spending, business investment, and investor confidence. In a high inflation environment, investors may seek alternative assets like gold and cryptocurrency, which are traditionally viewed as inflation hedges. The predictions surrounding a Trump win in 2024 reveal both promising opportunities and potential challenges. From sector-specific gains to potential global tensions, these insights illustrate how his policies might reshape the financial and cryptocurrency landscapes. For investors, understanding these predictions and their potential outcomes will be crucial to making informed decisions in an era that promises both opportunity and unpredictability. At the end, a second Donald Trump presidency brings with it a host of questions and considerable speculation across financial markets and the rapidly evolving world of cryptocurrency. From shifts in Federal Reserve policy to potential trade tensions and a renewed regulatory stance, the implications of Trump's return to office could reshape both traditional markets and digital assets in unprecedented ways. Investors are left wondering whether the policies that defined his first term will make a comeback, or if Trump's approach might shift to accommodate new economic realities and challenges facing the global economy today. Trump's stance on deregulation, tax cuts, and America First policies has consistently favored certain sectors, potentially setting the stage for gains in areas like energy, defense, and finance. Yet, his skepticism toward cryptocurrency and calls for regulation could mean that the digital asset market, once left to grow freely, may now face more oversight. This balance between encouraging growth in established industries and curbing risks in emerging ones is likely to be a hallmark of Trump's policy direction, should he return to power. For investors, navigating a second Trump term will require a keen understanding of these possible shifts. The stock market might see both short-term gains in Trump-aligned industries and longer-term volatility driven by potential trade restrictions and inflationary pressures. Cryptocurrency investors, on the other hand, will need to consider the effects of increased regulation, which might attract a more cautious investor base but could also dampen the decentralized appeal of digital assets. Ultimately, Donald Trump's potential impact on financial markets and cryptocurrency represents a complex blend of opportunity and caution. As we move closer to 2024, investors, economists, and market analysts alike will continue to scrutinize his policies, statements, and potential regulatory agenda. The uncertainty surrounding his approach make one thing clear. For anyone invested in the future of the economy, a Trump victory in 2024 would bring significant changes that require careful planning and strategic adaptation. In a financial landscape shaped by Trump's policies, understanding these dynamics will be essential for those aiming to succeed in an era marked by both risk and opportunity.